Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, the Australian dollar climbed to a 15-month high at 68 cents on Thursday as further initial easing with US-European tension and lifted risk appetite and robust jobs data also showed in Australia that unemployment was fallen by 4.1%. Employment was up by 65,200 and participation at 66.7%, reinforcing a tight labour market ahead of the RBA's February meeting. While markets have lifted pricing for a near-term hike, many news reports and along with that economists remain split given weak job ads and patchy demand and with the geopolitical tension calling after Trump signalled Greenland framework deal and no EU tariffs. Attention now shifts to major US earnings. Along with that, we've got the Fed meeting and also key data, including the GDP and the Fed's preferred inflation gauge, the core PCE index for the next Q. Looking at the technicals though, well, we're getting a little bit overbought here. This is the target that I felt could be reached, and now I'm sitting out. Just because we can see from a broader case, we're getting quite close to a potential top. I don't want to say this is the top, but the elevated price action and the strength of the last 4 days could eventually see a little bit of take in hand of profit taking, and therefore could see a retreat back towards the region of 67.60 or 67.30. Moving to the euro, the markets pulled back late in the session after Donald Trump said a framework deal has been reached on Greenland following talks to remove the threat of tariffs on the European countries and boost risk appetite. The US dollar also was slightly firmer with the DX around 98.60, and also the euro eased lower despite ECB commentary led by Christina Lagarde, leaving markets now focused on, as mentioned, US data being the GDP and the PCE. Along with that, ECB meeting accounts and EU consumer confidence for the next directional Q. Overall, though, the technicals are a little bit buckled but holding above the midway point, so we could see support coming in around 116.65 and a base around 116.25 and looking back towards 117.25 and where it stabbed close to that 118 area. Into the fourth consecutive session, the dollar yen is still holding above this trend line. No weakness at the present towards the level of 157.30.50 and to risk of a further downward move. We do need to see this level break from the trend line to get the move down to 155. Otherwise, we could see once again a repeat of history and look back to the top side of the range around 159, and then a bull trap will come back in play and the market will scramble and might likely see another pullback. Looking at sterling, well, the market's slightly mixed here. Nevertheless, still looking up towards that 135.10 cap and with a support seen around 133.35 to 60. Wrapping up with commodities, well, after rallying and bursting through 4,800, recorded a fresh record high of 4,878 and then pulled back. And now likely to see the market possibly see a bit of profit taking as some of the tension overseas from Trump is eased. All eyes will be on the US data, so let's see how it plays out. And the oil, well, the market's still holding up relatively well into the fourth consecutive session. Still hold a view to $62 a barrel with a base around 58.70.90. Well, that's about. Thank you for joining me. And as always, look out for the Insta report. I hope you enjoy the great start to the day.